Okay, so overnight markets, not much movement seen in the dollar, but stock market in US had a good day. It was mainly driven by rally in energy shares after crude prices went up by $2 nearly. Lot of drawdown from the gasoline and oil stocks. So crude prices have been steadily going up. Other point was that there was some couple of data from US industrial production just meeting expectations, and the Empire State manufacturing data where actually employment component was quite healthy in that. So that leads many people to think that August low non-farm payroll data could be an aberration, and things have to look better. So we will look at September jobs data before Fed takes a call on when to taper. So that is about the US market. But overall, if you see, there have been many events or data from other countries as well, which have a say in the central bankers' policy. Like UK unemployment data was very good, good increase in the number of jobs. Inflation was at a record high. So these are making people believe that BOE may be closer to a rate hike in early 2022. Canada also, there was high inflation, but these countries also keep saying that just like US, they also keep saying that these inflation numbers may be transitory. So we will have to see if the high numbers repeat in the coming months. But definitely the data from other countries are also coming strong. So it's not only the policy move from Fed, but from other countries as well that we need to watch out in the coming months. Chinese data, of course, was weak, but Yuan really not perturbed by that, so it continues to strengthen. That is something to note. But I would be cautious because last time we came below 6.43, state-run banks in China were seen buying dollars. So we'll see whether they do that. If we break 6.42, then it's a signal that probably they are tolerant of more strength in the yuan. But I think apart from the carry, which still attracts funds to Chinese yuan, I can't see any other reason why they should be. In fact, the problems with regard to the giant infra company in US that continues. So China is in a very interesting stage. Overall, if I had to say, dollar is still in a broad range and not moving out of the range. Japanese yen is stronger because of the repatriation season. September is usually the quarter end where there's a lot of repatriation from Japanese investors from overseas investments is in that right. It's in any strengthening against other currencies. So I would broadly say that global markets are strong, but looking out for any policy change from any central banks, and the dollar is still in a range undecided without clear direction. Rupee, obviously that range between 70 and 80 is proving to be quite strong. Last week we went to 85 and returned from there, but since then there was buying below 50, which supported. Yesterday at 70, 73, a lot of selling was seen. Before that, good buying was seen, but at 70, 73, a lot of selling was seen. Also related to IPOs, and the big rally in stocks also means that FIs must have been getting in a lot of inflows once again. So that's why there was a swift fall. And suddenly these nationalized banks who were buying also went away. So that's what resulted in 20 paisa movement. But again, 73.50 should broadly be again watched whether buying comes in from importers or oil companies or NATs. If that is not there, then 73.30 should be tested. But 73.30 should hold until FOMC. That is what I feel. That's the view on the rupee. We will, of course, wait for FOMC next week. Before that, retail sales data from US today also to be watched. Yeah, I'm done.
Okay, good morning, everyone. Basically, after a good CPI number, bonds fell in, yields fell in US, and that was followed up by in India as well. India yields fell by around 4 basis and moved to 10-year at 616. I think there would be some correction today, and it will go back to 618, 619. Incidentally, it's very interesting to see that India CPI and US CPI both are at 530. And the yield differences between two countries are almost a kind of a 5%. So that's interesting thing. But I think people believe that Indian inflation would be much higher than the US inflation in coming days. US 10-year yield also moved higher by 2.3 basis point, and it moved to 1.302. And we are seeing a very good support in 2-year US treasuries, and which is not able to go below 0.20, currently trading at 0.21. We heard from Ray Dalio yesterday, and Ray Dalio said that he holds more cryptos than gold at this point of time. And that's the interesting conversation. Lots of fund managers have started accepting digital currency as a diversification. Coming back to dollar rupee, I think that we should not be dipping below 73.40 if upward momentum to continue and move around 74. So yeah. Another thing is due to significant liquidity in Indian bond market or Indian money market, we are seeing corporates borrowing money at unseen levels. Reliance and Reliance Associates yesterday borrowed money against the 3 months CP at 342, 343 levels. This is closer to RBI reverse repo window, which is at 335. So banks can lend money at 335 to RBI, whereas Reliance and other people getting money at 342, 343 from Indian mutual funds. Interesting time. This kind of a liquidity can create a kind of probably yield-seeking wrong investment decision. Okay, thank you.